folks, I'm L.A. Little, and this is your daily TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves, what the heck happened today? And what does it tell us about tomorrow? I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful chirping bird Rocky Mountains. I get a lot of birds outside my window here. They're just talking to me, I guess. Had to shut the window so as to allow you to hear me instead of them. We had a interesting day. We talked about this last week. Last Thursday we had a drop. All right, first drop came out of that range that we had built up there for like 4 or 5 weeks. Popped down. Friday couldn't lift. Today, again, NASDAQ, NDX, they try to lift, they can't, right back down. World's crashing, right? I mean, I was reading, I did an article on Market Watch today, and there's 25, 30 comments out there at this point, and they're like, oh my God, it's caving in. Folks, I mean, we're 3.5% off the highs on the SPX, right? We're less than 3% off the highs on the NASDAQ. Give me a break. I mean, last week we talked about the potential for this market to work lower. I think we talked about it on Tuesday or Wednesday. It just was setting up that way. I think it was Wednesday, actually, that it set up that way. We finally had sectors telling us that, right? Giving us the indication. Yes, we traded lower. Yes, we will bounce. We always do. No, the world's not crashing. I mean, but there is something going on, and we really should focus on that, and it's really the bonds. The bonds are the story out here. The bonds are the one telling us that there's an issue, and the bonds are the ones that keep signaling that until they right themselves, this market's going to struggle, and that's what it's doing. Bonds sell off again today, down another 0.5% or so. Volume's coming out of this thing, right? Oversold, yeah, very oversold. I mean, look at it on the weekly. I mean, this is straight down, folks. This is like the market straight up. This thing's straight down. There's no support down here in terms of support zones, right? You got to go back over to the monthly to find those, and the one that was just there just went away. The next one was down here at the bottom of this bar. That's 97.35. Is it going to make it straight there? Well, right now it acts like it wants to. I mean, it sure as heck isn't turning around for anything else. More realistically, I don't think it goes there straight away. It probably gets some sort of a bounce, just like it's done every other time, does some sort of a retest regen, and then picks up and goes down farther if that's what it's going to do. Rising rates in a market that's been up for a very long time and is up a large percentage already this year, coupled with uncertainty about the Federal Reserve, who's going to lead it, what are they going to do at the next meeting? How big is the tapering going to be? I mean, go just down the list, folks. At least a week and a half ago, I talked about the idea that the glass was half empty instead of half full. You could see it. You could see it, you could feel it. It was starting to feel that way. And you have to realize that, nothing goes straight up, nothing goes straight down. Things move around. And what we have to do is try to understand when they're going to turn, or when they should turn, and see if they do or don't, and then judge them on that. Let's look at the indexes. Down 70 on the Dow, 15,010. S&P's down 9 3/4 at 1646. Composite down 13.5, 35.89. The NDX was down 4 points, 30.69. Apple, Google, both very strong again today. That was holding up. Matter of fact, this market ran up this morning on tech. By the end of the day, even tech had to give it up for the most part. Russell, big loser, down 11. Russell's coming back to that magic breakout, which was about 998. Russell's almost there, 10,013. So bonds are the big story, but let's flip over. Let's take a look at what's happening with the indexes. Okay, the S&Ps. S&Ps haven't given us a good read for a while. They were up here consolidating, they broke, they came in to do the retest here, they failed. I guess that was a decent read in that they couldn't stay up there, right? But that really only gave you the read to go down here and test. Then we finally broke the swing point lows. We broke 2 of them on this time frame, nothing on the longer term. Matter of fact, the longer term time frame, that is way out. You know, if you look at it, we're just coming back to do the retest regen bottom, right? It's within 6 bars. It means you can get to the bottom. 1635 or 1648 was it? 46. Okay, so we're seeing these selling, right? We're seeing this selling, bringing us back on the weekly to do the retest regen. A lot of support underneath there. You'd really have to get worried if you get all the way down here, start breaking these swing point lows. That low again is 1560. We're at 1645. We're 95 points away. Can we get there? Well, I don't know. I don't think we go there straight away, and even if we did go there straight away, I don't know that we could break it and stay under it. I mean, that's a long way straight up. So odds of that are not particularly great. But we do have weakness on the daily. We can see it. Where's support here? You don't have it until you get farther down. And so this is not a very good read. If we go to the Dow Jones and we look at it, weekly on it, you see it's already under that swing point high. This has been the weakest one. It got underneath it. Now that's going to be resistance on the way back. It's into the big bar. That's the bar that has the swing point low on it. 14,858, excuse me, 14,551 is that low. We closed, or we actually traded as low as 1505. So you'd have to drop another 450 points. Is it doable? Yeah. Dow has been down like 4 days in a row, and it's dropped off the top here. Actually, it's been down roughly 2 weeks in a row. Not in a row, but straight away, right? That top was 15.6. We're trading at 1500, so we've lost 600. Can we lose another 400, make it a grand 1,000, and go down and test the low? Yeah. Will it bounce? More than likely. I mean, seriously, is this going to just go straight away to the bottom? You know, folks, anything's possible, but you're back into a support zone. You got some big bars coming up here in another 100 points. You know, if it wants to come straight on down, volume's really not that big yet. Now, that can cut both ways, really, because if volume were to be expanding, right, usually that's kind of a washout. You're not getting the washout here. So from that perspective, it's probably not exactly what you would rather see. That can cut both ways. But there's no test here. There's no test here that gives you an indication of whether or not this one's going to continue or not, right? You're into support, yeah, it may hold. The real test is over with the strength indexes. So let's look at these. NDX, that's the first one. On the swing point high, 3053, is trying to come back to it, 3069, so it's 16 points away. That's not that far. Apple, Google's been holding up. If you look at Apple, Apple's probably made the most of its run already. Yeah, Google can bounce some more, but the big cookie or whatever you want to call it, right? The big enchilada is Apple, and Apple probably isn't going to add that much more juice to this move. Now, I don't know that Apple's going to take away from it, but I don't see it adding much. If I look at the NDX here, just looking at it from a candle perspective, that's just a failure. You went into resistance. Well, the candle is a failure candle. Neoclassical, you went into resistance, you traded over it, you're back underneath it, you couldn't get up there and you couldn't stay. That's not a particularly good sign. So when I look at here, this tells me this guy can come on back and test some more. Where would I expect the first test? 30.63. That's the top of this bar. We traded down to 30.69. I wouldn't be surprised to see it trade into that bar. That also is 30.60 is the top over here. That also is that's the swing. That was a breakout bar, and the reason I went to it is it's a breakout bar. 17.4, it's 13.5 on the way back. It's only 9 points down. That to me looks like the test, right in between those two areas. So I would expect this test, that's a support zone, I expect it to hit there in the morning. The IXIC, the broader composite, also trying to come back to swing point high, has a ways to go still. It is underneath the swing point high again. That's 2 bars. You don't want to see it down there for a couple bars. It's down there for a couple bars. That also tells me this one can try to trade lower now. Now you have to start thinking this swing point low. So that price point is 35.73. The breakout bar here was 35.79. It's got 17.4. You're coming back with 13.8. I wouldn't be surprised to see that one tested. 35.76. You're at 35.89. So 13 points here. That's really nothing. It can do that easily. So these two are telling me that we're going to try to trade back into that area, and I would expect we're going to try to trade it in the morning. If I flip over to the Russell broke through, closed the gap, coming back to the swing point high. That's also the same on the weekly as it is on the daily. That price point is 1,001.49. We closed at 1,014, 1,013. Closed right at the lows. 12 points to go. It looks to me like it's going to come back into it. The breakout bar here has a high of 10.11. We're just a stone's throw from it. I can't see it not trading into that. You can see again, volume's not there. Why do I emphasize the volume? Well, I emphasize it because if you come into those areas, and the read on volume today could definitely change tomorrow as you can't come into it, so you have to see what it comes in there with. But if you come in at lower and lower prices, which is what we've been doing, and the volume decreases, sellers are less willing to sell at lower and lower prices. That's less supply. Less supply means it's going to be harder and harder to get lower and lower on that volume. And that's what's taking place here. And I apologize for the sound. I believe it's because when I scroll these windows, it detracts from the sound quality. So I've gotten to where I'm not doing that anymore. Hopefully you're not getting that bad sound quality now. So let me know if you continue to. Sometimes I don't reboot the computer. That could be part of it too. So if so, I apologize. All right, so that's the indexes, right? Indexes all telling us that we can go lower tomorrow. They all tell us that we're getting to points where this market is going to bounce or it really is going to move lower. One of the two, right? We're going to get some sort of a washout move or we're going to get a bounce. One of the two. My suspicion is it's going to be a bounce. If I go to the sectors and I look at the sectors, and starting with the transports on the daily, they'd already finished an ABCD down. They're into support. They're just hanging there. Now they have a high volume low here. They did break 2 swing point lows, got that big push down, bounced off of it. These look like they will come back and test it again because it actually hit the low over here with volume, and the only bars that really are of the same size, if you will, in terms of volumes are over here, and they have lower lows. So I wouldn't be surprised to see that low 112.44 get tested. Let's see here. XLB. Okay, the XLB we actually talked about, and that XLB, let's not look at the weekly, let's look at the daily. The XLB had gone up, tested the highs on the weekly, excuse me, on the weekly was the test, the failure. That's why we thought it should try to pull back. It did pull back. There's no volume here as it's pulling back. Support zone's quite a ways down though, so I suspect this one can pull back farther. Where's the good support, if any? Looks like the first spot for it is about 40.26. It's not that far away, but you know, that's not great support, but it is support. So this one can certainly pull back farther. Let's look at the energy sector. Now the energy sector, I expected to actually go sideways to higher, and it's pulled back farther. So it pulled back deeper. It's back into the lower support zone, and it's fixing to come into this big anchor bar, 79.75. And it looks to me like it's going to hit it. So, you know, reviewing it, IYT can come back. XLB wants to come back. XLE looks like it's going to trade lower. Does this sound familiar? Sounds almost like what I just talked about in the indexes. Financials back into support already on the weekly. There's not much here. Remember, folks, we went up on almost nothing, right? Broke with suspect breaks, right? Coming back, when you do that, there's not a lot to hold you. It's doing a retest regen off that swing point high on the daily. That's 2020 at the high, 1983 at the low. We traded down into it. 1983 was the close, traded under it, closed at it, less volume. ABCD is down and completed now. This would be a sector that you have to watch tomorrow to see if it wants to flip around. I would think the strongest sectors are the ones that should see buying interest when this thing turns. Financials are not going to turn, as I started the show, without the bonds. And so the bonds are going to be the key. Can they find some buyers, or do the sellers just keep showing up? XLI, this one actually is pretty much going sideways. It's just hanging there. These are not nice patterns, if you will, right? The way they're set up. In other words, you gap down, you hold here. But you've had this before. I mean, I could go back and point out multiples of these where you come down, you hang, and then all of a sudden you go the other way. So even though it doesn't look particularly palatable at this point, you know, it could hang here. It looks to me like it's going to try to trade down in the swing point highs, though. So almost all the sectors, as I flip through them, show the same thing. The XLK, this one actually looked like it should try to come back. It failed on the weekly, as we saw last night on the weekly broadcast. Here on the daily, it didn't quite get to the high, 32.05 on the gap area. Got to 32.04, had less volume. So you really have an inside day on the technology sector. The ones that continue to sell off, the XLP, a little bit less today, but still selling down. These are the ones that are having interest rate problems. XLU is another one doing the same thing. I don't see where these stop until they get down here to some real support. They're blowing right through all the support at these higher levels. So I don't see any of these other than the XLV, which is the next one up, actually trying to turn. The XLV went under, back over after an extended move, less volume. This one wants to turn. So that's the first one. XLF, XLV, that's the ones to look at tomorrow. And the last one here, XLY. XLY pulling lower. Yeah, I mean, it's got support here, so it still looks like this one's going to try to hold. And this had been a strong one, and they just sold it off deep. Now, the real test, you know, even though it looks as bearish as it does, you know, bearish in terms of the patterns, the real test will be, what does it do when it bounces, right? You got to, whether it's from here, whether it's from deeper, what is it going to do when it bounces? Are we going to get one of these V-shaped moves that just go on and on? Or are we going to go up and fail miserably at like the gap area or slightly above it, right? That's going to be the real test. And we saw the break coming last Wednesday. Now the break's there. Now you're down off the tops 3-4% depending on what you're looking at. And, you know, we may go another 1 or 2, maybe another 3% before we flip around and get the good bounce. we could get the bounce tomorrow. I don't see it in the charts today. I see more testing to the downside tomorrow, but at the same time, this doesn't look that negative to me off the top. I expect you're going to get a bounce out of these darn things, and then we'll see what they really want to do. My inclination is that bounce is going to have a hard time, though. I suspect it's going to have a real hard time. And let me address the sound quality one more time. There's a lot of bandwidth coming out of this broadcast, as with most broadcasts, and so, depending on what kind of speed you're pulling down on your internet, if I move charts around, I'm moving a lot of pixels. That requires a lot more bandwidth, and therefore you see me usually just flip between charts. And the reason for that is so I don't use as much bandwidth on you, and therefore keep your sound and quality higher. So one of these days we'll probably move to a different provider, but right now this one still works okay, and it has the right price. So let's take a couple questions. I could look at the ox markets, but I looked over them right before I came on air. Gold really starting to pull back like we thought it would. Silver doing the same. Remember, they had a test failure, but they're not going to give up this move very easily, it looks like. If I pop into them, like into silver actually in particular, let me pop that one up right quick. The silver market, if you look at this one on a daily, you can see here it's just not trying to give anything up here, right? It's still hanging up there. So you can see that really wasn't just short covering. The buyers are still somewhat interested. And that's a good sign from a bullish perspective, right? This thing wants to try to pop higher. Dollar, who knows? FXE looked like it fell. Dollar really is just hanging there. FXY was wanting to go up a little bit more. I didn't look at copper. Let me see what copper did. Yeah, not bad. It came down with a little volume. Yeah, I can pull back a little bit more. And the main one here was TLT. Let me see what junk bonds did today. I'm assuming they're continuing to sell down. Yes, they are. On the weekly, you can see it. On the daily, you can see it. They're coming back, just like everything else, they're coming back into areas that they have to bounce, or we're going to get something more serious take place. 39.12, they're coming into it. 39.18 tonight. And that's it for those. So I'm going to flip over to your questions. There's some questions about the audio. Sorry. ExxonMobil. Let's see what ExxonMobil looks like. So ExxonMobil is one of the big XLEs, right? It's the largest weighting in the XLE. That looks like a ABCD that just completed. 95.49. That's roughly $4. And that would take you about to 87.50 or so, and we're at 87.03. Yeah, so that just today finished off an ABCD down. Okay, broke a swing point low, extended, really no volume today. On that time frame, that looks like a bounce setup. Now how about here? Yeah, here you're coming into support. No, I'm on the wrong one. No wonder. I didn't do it the other way. Let me get ExxonMobil. Here we go. So ExxonMobil is trading back down. So that's a break. Oh, that's interesting. So you have a break. Oh, we had it last week. We had a break last week on the weekly and the daily on Friday. So I guess that honestly isn't surprising that we continue to trade down today. And that's not a particularly good sign. This one's going to trade a little bit farther down. You know, when you break on multiple time frames, it usually leads to a fast move in the direction of the break. You broke here last week on Friday. You broke it here. You broke it on the weekly. That's a fast move down. I would think you at least test this bar, 86.52. You closed at 87. That's another 50 cents. That's nothing. And that looks like that's a minimum. It's gonna probably get at least that low, and then it'd be all about the retest regen. If you're breaking with suspect, you're gonna have to break back above this bar. That high is 89.50. So I would think some more down, another 50 cents at least, and then some sort of a bounce potential out of that. But this is not something I would try to buy as a result of the break on multiple time frames. I don't buy those. Right? You just have to go somewhere else if you're wanting to buy it. Yeah, I mean, I explained the last question or the last thought here had to do with the sound quality. So I'll have to be more careful and don't move these things back and forth. I assume the sound quality's been fine the last 10 minutes or so. Okay, so, my take is very simple. Short term, we could see some more downside. Very possible. We could actually we may have seen the downside today and get the bounce tomorrow. We've already seen the world sell down. It's not just here. And matter of fact, if I pop over there, it's not as if we're the only ones that have sold down at this point. Most of the other markets have sold down with us. So if I pop over and look at, the Hang Seng, for example, Hong Kong, the Hong Kong market, well, I take that one back. This one doesn't even want to sell down. So Hong Kong is still holding up. But if I go elsewhere, like the CACs, the CACs is trying to come back in some, right? It was up there at the highs, it's trying to come back in some. And the DAX is doing the same thing. Europe was down today. They've been up there hanging at the highs. They were down, but they're not down big. I mean, they don't look bad. The FTSE was the worst one. And if I look at the FTSE is, down here hanging more like we are. But it's coming into areas again, just like us, that, another, what is that, 40, 57, that's another 20 points down. It should find support, another 0.5%. The ones that have been getting hit were the other markets, like maybe Taiwan and some of those, right? That they had taken hits prior to us. I saw Singapore was down big last night. You can see Taipei is still struggling. You see, I think I have Singapore. Yeah, here we go. These guys took a hit last night. You can see a fairly decent move here. So the rest of the world has already started to trade lower. Let me look at Brazil right quick, because Brazil, I had one of the members send me about the currency issues. This market's interesting. So you're seeing the actual market hold up while the ETF comes in. And that's quite a divergence. And I'm assuming the largest part of that is just the different weightings inside the two. And I'm going to have to do some more work on that myself, because I didn't believe, I was unaware that divergence, not the divergence, but yeah, the divergence between the index and the underlying index and the ETF was that great. I've seen it diverge before. I mean, that's not the first time, but anyway, it's a strangeness that one needs to understand if they're going to invest in it. But going back to the point before I run out of time here, markets have already sold off. Markets are going to bounce. My opinion is they're going to bounce. They're probably going to bounce. I said probably today or tomorrow. I would be very surprised if they don't. So maybe we open lower in the morning, then we get the bounce. Maybe we just simply bounce overnight. The question is going to be the quality of the bounce. What does it look like? What does it do? How does it behave? Does it fail again, or do we simply go back up, test, and then break higher and do a V-shaped move? We've seen them so many times. I would tell you, though, we are in the latter stages of a bull market. There is going to be a correction that's going to be quote-unquote a bear market, and it's going to come at some point. I mean, we can't go up 5, 6, 10, 20 years. I mean, it just doesn't happen. Most bull markets last about 3.5, 4 years. We're 4.5, 5 into this one. It will come. If you look at the MTTFs on the indexes, you can see it. You can see how we're starting to get pretty stretched. So we have to keep that in the back of our mind. But those are long-term thoughts, and we're not at the point to think about that yet, other than to just keep it in the back of our mind. At some point it will be important, and us realizing that we're at that stage is an important thing to know. But it's too early to think about that. What we have to do is concentrate on what it's doing now, stay on the right side of the market, and then we'll be where we need to when it's time. So with that, I'll let it go. I appreciate you being there. Tell a friend, tell two. Pop over. As I told you last night, we've changed the TATV, as you've certainly seen by now. You can pop in here and you can get this on YouTube now, so you can listen to it on your mobile devices anytime, anywhere. So if you're into that, we've made it available to you finally. Folks, I appreciate you being there. Take care of yourself. I'll see you next time. Until then, I'm L.A. Little. This is and was your daily TA Wrap. Have yourself a great one. Take care. Good night.